What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our Friday Market Open live stream. Hope you all are doing great after the Juneteenth. Markets were closed, of course, on Thursday, June 19th, and we're back with the markets open here with about 40 minutes left until market open. So we're going to take this time to evaluate certain options trades. I'm considering some longer dated calls on Palantir, BITX. Of course, pre-market, we're seeing a little bit of momentum. So Tesla is higher by over 1.7%. We got Palantir trading back over 140 bucks. Nvidia is flat. TQQQ is higher. Hims and Hers is up over 2.5% starting to stay. So thank you so much for joining, everyone. If the audio and the video is good, just give me a thumbs up. I just want to make sure there are no issues, there are no problems with the audio or the video of this live stream. So hope you all are doing great here. Is it me or your Wi-Fi is bugging? So Anthony, hopefully there are no issues. So just refresh the live stream. Your audio cuts out every 2 to 3 seconds, David. Again, if you want to refresh, it should be fine because I am... Yeah, just try to refresh and it should work. There should not be any issues with anything. So your audio is breaking. Okay. If it's really breaking here, let me just try. Let me just try with this. Is it better now? Is it better? Hello, hello, check. 1 2 3 4 1 2 3 4. Check, check. Okay, it should be better now because I just reconnected the audio and I'm listening it on my phone as well. Okay, better. Video grade, audio gain, maybe tiny bit too loud. Yes. Okay, still no. Same. Some people are saying better, some are saying it's not. Can you try and refresh the live stream? Can you exit and then come back? See if that helps. Same, it's breaking. Okay, some people are saying it's better, some are saying it's breaking. So, I don't know. I mean, I've got the live stream playing on my phone here, and it seems to be working fine. Huh. Okay. And you fixed it. It's okay in California. It came back. Fine for me now. It's fine now. Okay. We're going to continue. If this persists, please definitely do let me know in the chat if this continues. If there's any issues with the audio, I will just go in with the MacBook audio. Maybe there's some problems with the connection with the microphone, but just let me know if there's any issues, okay? House of Drama says, I think it's the same. Better from New York. Okay. We're going to go with it. So again, welcome on board, everyone. So we're here to wrap up the week, and S&P 500 on the week here is essentially flat. It's down about 7 basis points right now, and the options portfolio doing really well. By the way, I have it open here on this side. So these are all my positions right now. Of course, I've got BITX, I've got Nvidia, I've got SoFi, I've got SOXL, as well as Tesla. We'll monitor this throughout the day. We'll see if there's any moves that I want to make. But it's sitting at an all-time high, well over 213,000 right now. We'll send out the update on the options portfolio for all the members over the weekend with the portfolio now officially up over 18% year to date. And this is all part of a very disciplined strategy that we go over by selling options, by simply looking at opportunities. The sweet spot really for us, or for me rather, is selling options, writing options so I can generate a lot of premiums while also capitalizing on these lower deltas, and of course on stocks and underlyings that I really want to own. I'm comfortable buying them at certain prices. So that's the overall strategy. So far year to date, the portfolio is up just over 50,000. That's the year to date gain, just 6 months into the year, because we are now in week number 25. So next week is going to be week number 26, and that's literally going to be the halfway mark for 2025. So 17.5 over 18% into 6 months. If you analyze that, we're looking at just over 30% returns for the year. That's really been my target. My target's closer to 20%, but of course, the more the better. And that's going to be the potential target there. MoneyVest Index sitting at 3.46, so we've kind of stabilized a little bit. We've come off of those levels of optimism when we were trading at well over 3.5, 3.6, 3.7, so you can see that we were hovering above those levels here for quite a few days. in most of June, we were kind of hovering in that optimism level. And of course, we've come off of those highs more recently, last couple of days, as markets have rotated lower. We've seen a little bit of consolidation, some exhaustion on the upside. We're seeing the market essentially trade sideways. The Money Invest Index also coming down with volatility, couple spikes we did witness on the VIX here on the back of course, those escalations in the Middle East, as well as trade tariffs, concerns over inflation, interest rates, a lot on the line at the moment here. So that's where we are in this market. I am considering, like I mentioned earlier, some longer dated calls on Palantir as well as BITX. BITX is higher. Pre-market, it's pushing up over 4%. So I was looking at the $110 calls on BITX. So those are going to be for December. And if BITX more than doubles from here, I'm going to be more than happy to let go of my shares at those prices. And if it doesn't, then of course I'm able to, keep the entire premium. So I was looking at December 2025, which is 6 months out, 182 days, looking at 120, 130 call strikes with the delta that is sitting at really, really low levels here. So we are looking at 0.18. So anything under 0.2 is the sweet spot for me. So 130 is sitting at 0.17. 125 is sitting at 0.18, and 120 is sitting at under 0.2, with a premium of sitting at just over $230, $240 for this contract. So this is something that I am looking at. And but selling longer dated calls on Palantir, right? What date are you looking at? So yes, for Palantir also, we'll be considering the December options, so 6 months out. And the primary reason for this is twofold. Number one, valuation and overbought risk. Right, the fact that Palantir is, trading at over 200 times forward earnings, looking at very overbought and stretched valuations as well as technicals, and really it's a win-win strategy, because if you look at December, right, December is 6 months out, and let's just go over to December 19th, 2025, which is again 6 months out, 182 days. I'm looking at $210 because that's how far the options chain goes up to. You can't go anything above 210. 210 is like the highest strike that I'm able to find right now on the options chain, which is paying you $8.25. So that's over $825 per contract. And if you look at the delta for this, it's under 0.3. So there is still 27% probability that this option may expire in the money. So in other words, Palantir could get up to $210 by the end of this year. There's a 27% chance the market is putting up on this option, but there is still a 63%, or rather 73%, I should say, probability that this is going to expire out of the money, and we're going to be able to keep the entire premium of $825. Now, even if it does get up to $210, right, that's going to be a massive, massive move from these current levels. So if I come over to where Palantir is, of course, we're trading at $140. Getting up to $210 is going to lead into a rally of another 50% in 6 months. Is that possible? Yes, absolutely. But if that happens, of course, the underlying shares are also going to move up with it. So, we're going to be looking at a market cap of well over $500 billion for Palantir, which is going to be insane, right? Which is going to be absolutely ridiculous for a company that's generating revenues of about 2 to 3 billion, 4 billion for this year, 5 billion for this year, but to trade at $500 billion, that's 100 times sales, which is just astronomical. So those are some of that's a thought process of, looking into selling options on Palantir for December, 6 months out, $825 for having so much 50% upside still uncapped for Palantir. If it gets up to that level, great. Underlying shares will increase by another 50%. If it doesn't, I get to keep the entire premium. And that's what I have for Tesla as well, right? So Tesla December, I've got $500 and $600 calls, which are combined premiums of $4,000, right? So if Tesla gets up to 500 or 600, I still get to keep the premium and, of course, capitalize on that 60 to 70% move on the underlying shares. If it doesn't get up there by December, I still get to keep the premium and, of course, my shares as well. So that is something that I would be looking at for both Palantir and for BITX as well. So ADUB, do you only sell to open options? Do you ever buy to open? So not really. I mostly sell to open. That's been the primary strategy, is selling options and looking at very, very good high quality underlying stocks such as Tesla Nvidia, Palantir, hims and hers. Those are the companies that I'm looking at either acquiring, accumulating, or selling options on. And that's been the strategy for the most part. And like I said, the goal really is to grow this portfolio, which I've started from $100,000, and I've added a little bit every so often, every few months. I've added more money, and the goal is to grow this portfolio to close to $1 million. That would be the idea, to get this portfolio up and running, because this is primarily the options portfolio. I've got a lot of options trades on this right now. I've got the Tesla calls, I've got the SOXL puts, I've got the BITX puts, I've got the Nvidia calls, SoFi calls that I opened at $16 that are getting very close to the money, because SoFi right now is sitting at $15.57. I've got the $16 calls expiring next Friday. So if it does get breached, I'm going to be looking at rolling them out to $17 or $18 to try to keep my shares as much as possible, because I do believe in SoFi long-term as well. So I don't want to get rid of my shares. Also, credit spreads. So those are also something that we are going to be doing, over the course of this year. We're going to iron condors, credit spreads. Those are going to be somewhat lower volatility strategies, because they do thrive on lower volatility. Iron condors are also going to be thriving on lower volatility. They do have some risk, some incredible amounts of risk, right? Because you are, at the end of the day, you're going long because you're buying a long put and a long call, and then you're going short, right? You're selling calls and puts that are with a strike price that is less than your long calls and long puts. So it does create certain scenarios where you are exposed a little bit more than you'd want to be. So really the idea is evaluating and assessing the risk and reward with everything that you do, right? I know there's a few comments that we've received in our YouTube videos, why are you not more aggressive? And the answer is that I don't need to be, right? I really don't need to be more aggressive than I am already because of the fact that returns are coming in, right? If I were behind the market, if I were struggling to keep up with the market, then yes, I would go out the risk curve to take on more risk. But right now, I don't need to. So if I don't need to, I shouldn't. Because with more risk comes more volatility and comes more fluctuation in the overall portfolio. And of course, it opens you up to more possibilities for losses. So if you don't need to take on more risk, don't take on more risk and just do what's actually working. So that's the whole idea. And again, if you have any questions, I'm more than happy to go over fundamentals, technicals, options, trades, any kind of potential ideas that you want me to go over. More than happy to. And yeah, SOXL semiconductors have also been doing incredibly well. SOXL back over $22. Of course, my exit was a little bit too soon. I did sell around $17, $18 for SOXL, but profit is profit, and ended up capitalizing on quite a nice swing on SOXL. So that's where we are. Let's see, Uber. Let's take a quick look on Uber Technologies here. And consolidating sideways, it is coming off of that resistance back down to an area of support. I would say this is an area of demand for Uber, which was previously acting as a resistance. So this would be an area of demand here. It's roughly around $80, $81 per share. And we've got another really important area of support for Uber right about here. So you can see a lot of consolidation sideways, then it broke out, and then we're seeing a little bit of that sell-off. Now, it is making lower highs, so there is this descending triangle, which is forming right now for Uber. So this would be that descending triangle. Now, again, ideally, these descending triangles have been more weak patterns, but it's also coming off of this massive rally from 61 all the way up to as much as $93. You can also see this as a little bit of a bullish pennant, so to speak, bullish triangle, whatever you want to call it, if it could break to the upside if there is a lot of volume that comes in. But usually with these descending triangles, a breakdown below this support is also a possibility, right? So trading in general is based on a lot of probabilities. There is no prediction. Technical analysis will never tell you exactly what's going to happen, but it's going to give you a little bit of those probabilities of what could happen. And it's a lot more, it's a lot better to be more reactive than it is to be proactive, right? You shouldn't be betting on either move, but really just waiting until the move happens and then, of course, capitalizing on that momentum. So that would be for Uber. Thoughts on Apple? I am a little bit more mixed on Apple. I think Apple has been underperforming for quite some time, so it's really struggling right now. So this is, the longest underperformance we've seen from Apple since, if you come back here, the last time we saw that was back in earlier January and February of 2024. So if you come over to the weekly time frame, you'll notice there's only been 3 times we've seen underperformance more recently since 2021, 2022 from Apple. And all 3 times Apple recovered. So this was 2022, this was 2024, and this is 2025. All 3 times it came down to that support. That's the green line that I've marked out. So we could be towards the end of Apple's underperformance, where Apple could start to find support here at this level, as it has already done in the past. And of course, it's recovered quite well, outperforming the S&P 500. The question is this time any different? Is this time the same? That's the real question. Now, from a company standpoint, I know for a fact, and I was talking about this with my brother as well, with a lot of my friends, that as a consumer, I think Apple has been very, very strong in retention, right? I feel like with the Apple's ecosystem, having an iPhone, having a MacBook, things are a lot easier, more simple, and I'm just kind of used to the products that Apple has. But in terms of innovation, yes, there is a lack of innovation. You could argue Apple dropped the ball on AI. There's a lot of companies doing a lot better work with artificial intelligence, but that's been Apple's culture, right? They'd much rather be right than early. So they're kind of known for building it late, but building it better with better marketing. So it really is, I'm kind of mixed on Apple, to be honest. The underperformance is the clear market signal that Apple is not able to keep up, at least so far, with artificial intelligence and the innovation that other companies and other manufacturers are doing. But time will tell if Apple's able to recover from this. So for now, support level 194, 195, down to as low as 160s. I could see myself jumping into Apple if the valuation comes down. Right now, it's still 27, 28, 29 times earnings, which I don't think Apple deserves that level of premium anymore. So I would be a bit more careful with this. So, okay. Tesla today, what are your thoughts? Let's just quickly go over Tesla as well. A lot of consolidation, and as we discussed in our yesterday's market update, or Tesla specific, the fan favorite video, there is some institutional outflows. So RSI consolidating sideways, MACD's been hovering sideways, and the L3 banker oscillator also, showing signs of weakness on Tesla. We're struggling at this resistance, which is sitting at 326, 327. That's a level that I'm watching carefully. If it does break above 326, 327, I could see Tesla back up to over 360s. We got the robotaxi event scheduled for later this month. It's pretty confirmed now from Elon Musk, so we'll see what happens either prior to the event or after the event, after it completes its first successful ride, completely unsupervised and through the robotaxi. So, of course, it's going to be geofenced. It's going to be operated behind the scenes from an actual human. It's going to be model-wise. So, again, Tesla's rolling it out very, very strategically. Safety is the most important piece in this entire equation, because first impression is going to be a lasting impression of this technology and how this works. Waymo has been super successful, but there are other things that we have to also consider: scalability, geofenced, as well as the cost of Waymo vehicles, and of course the teleoperations from behind the scenes as well. What Tesla's trying to achieve is completely different, completely unsupervised FSD without any intervention, and the car being able to make its own decisions wherever it goes. Doesn't matter whether it's in a very high density area where there's a lot of city metropolitan area, or if it's in the outskirts where there is a lack of network or signal, right? Being able to do what it does all on its own. So there is definitely a lot of differences between those two companies. So we'll see how Tesla's robotaxi performs at the end of this month. Very, very important event, because this is really going to unlock a whole new revenue stream for Tesla long term, right? Because that's going to change a lot of the models, a lot of valuations, and it's really going to cement its place as not just a company that sells electric vehicles, but also a company that is looking into other ways of generating revenue, right? Higher margin revenue as well. So yeah, keep a close eye at 337, 327, 320. What did I say? 334, 335, that level. And support level is going to step out at 310 right now. So L3 banker oscillator actually tracks a lot of larger orders that may not be available right in the market, but also pulling in some of the dark pool orders and some of the larger volume orders. So it really gives us insight into institutional order flow, or what the big money is actually doing. So if there is, some kind of uptrend, or if there's, especially these yellow bars are suggesting for some big order blocks coming in for that stock. And usually you'll see before any move, we've seen a lot of large order flows coming in from institutions, right? Same as you can see with AMD. Couple times large order blocks coming in. Of course, as this move is happening on the uptrend, we're seeing more and more momentum building up. And the same is true on the way down, right? There's outflows and there's inflows, and that's what it tells us. Are you planning to roll your SoFi calls due to $17 or to $17 or to $16 for a later week? I presume you are in the red because of the stock's rise this week. Yes, so I am. If you come over to my positions here, this is the portfolio and this is my SoFi. Yes, I'm down about $193 on these 12 calls. So that's where I'm at. But right now it's just unrealized and it's just showing as a paper loss, but it doesn't really mean anything because I've already collected the premium. And if I do let them expire in the money, of course, I'll be obligated to sell my shares at $16 and still keep the premiums. But I will be rolling these out if that level gets breached. So we'll see if SoFi gets up to $16. If it's not, then yes, I get to keep the entire premium. But of course, with decay, this is going to eventually be profitable and the calls are going to be worthless. They're going to literally converge into $0, expire worthless basically. But if it, of course, expires in the money, then I will be looking at rolling them before the expiration. So we'll come back and revisit this next week. So I'll see how this ends up trading. So that's where I'm at. And let's see. Let's go over where the markets are right now. We got about 15 more minutes until market open. And then we'll see how the markets trade to close out the entire week. We are flat on S&P 500. We are very, very flat right now. So I have the same trade as you on SoFi. That's good, Arish. That's good to know. Yes, Adobe's been selling off quite a bit. So if you come over to Adobe, it's been really struggling. It was in this downtrend, lower highs and lower lows. It still is, with a very strong support center roughly at $340 all the way down to $274. Now, Adobe is interesting. I would say this because, over the course of my experience as a consumer with Adobe, things have changed quite a bit. And I've seen a lot of creators, I actually did a lot of videos in the past going over another software called DaVinci Resolve. I think it's called DaVinci Resolve or DaVinci something, where you don't have to pay a subscription. It's really just a one-time cost of acquiring the license to use a platform for video editing, and you don't have to be tied to the subscription for Adobe, which has gotten crazy expensive in the last 3 to 4 years. They've been able to increase the cost of their subscription for their entire suite of packages, Premiere Pro, Lightroom, Photoshop, everything, to an insane $60, $70, $80 per month. And I think for a lot of people, if you keep increasing the cost, obviously they're going to start looking at alternatives. And I think that has been one of the issues for Adobe's long-term, because there is a switching cost, right? There is a little bit of a hesitation, more of a headache to learn a completely brand new platform. But at certain price point, it does push a lot of people away from that platform. Like me, for example, I have changed my subscription with Adobe over the last couple of years, where I'm only paying for what I'm using, right? Which is, of course, Adobe PDFs, all that stuff, very important. But I've looked at other options as well, right? And if that continues to happen, then of course it affects the number of users. It affects how consumers behave. And DaVinci Resolve is from what I've seen and what I've heard, is incredibly powerful as a software for video editing, similar to Premiere Pro. So competition-wise, yes, that's been an issue, but the stock's been struggling quite a bit. It's been selling off from its highs of $694 down to $277, so 60% sell-off. This was all during the bear market of 2022. But now, since April 7th, we've seen a lot of stocks trade back higher. A lot of them are up 30, 40, 50, 60%. Adobe is still struggling, still in the context of this lower highs and lower lows. And really just from the beginning of January of 2024, Adobe's also been underperforming the market, down about 41%. So support level 340 down to 274. That's also been the COVID low, which is crazy. That was a 5-year low for Adobe here. So I would watch 340 very carefully. That would be a price to watch. Ronaldo F1 says Palantir to $180 soon. Man, that would be crazy if Palantir gets up to $180. I mean, this has just been an insane rally for Palantir. I mean, you look at the monthly chart, every month has been green since May 2024. Only 1 month, March 2025, where we were like basically flat, but since January of 2023, stock's up 2,300%. Absolutely insane, 23x. Okay, let's take a look at Circle. I know there was a news that came out about stablecoins, a brand new IPO. It's up 33% yesterday, up another 14% right now. So this is a stock. I know there's a lot of IPOs that have happened more recently that I've got to go over and evaluate. But this is already a $44 billion company with annual revenues that are sitting at just under $2 billion. So we're already looking at over 20 times sales for this business, closer to 25 times sales. So valuation's high. Just be careful. I know IPOs are picking up. I know there's a little bit of excitement for IPOs once again. But just be mindful that you are trading on momentum and not so much on fundamentals because of the valuations themselves. But the momentum's been very strong. As long as you are okay with that, just be mindful with proper risk management that the momentum has been insane, 268% in a span of like 15 days or something. Okay, Micron, let's take a quick look. Micron Technologies here. Again, I actually love Micron. I love a lot of semiconductor stocks because they actually perform different functions in the entire ecosystem. So my favorite semiconductor companies, of course, NVIDIA, Advanced Micro Devices, Broadcom, Arista Network, Micron, and then we got ASML, Texas Instruments, TSMC, Lam Research, Qualcomm, Applied Materials. Those are the ones. I know I mentioned a lot of them, but some that I don't like, of course, Intel. Supermicro has been a little bit more volatile, so I would be very careful with that as well. But almost all of them kind of perform different functions in the entire ecosystem. So I do like most of them. That's why I do prefer SMH, right? SMH is the ETF that I will consider dollar cost average into, and of course, I'll trade SOXL from time to time. But Micron here, I've got an analysis on this chart, I believe. So if you come over here, we're looking at a resistance now, sitting roughly around $130. So this right here is going to be that next level, and this will turn into a support. However, I can already tell, very, very overbought. You can see the RSI at over 82. So I'd be very careful, technically speaking, for Micron. Insanely overbought. Support level is going to stay at 113, 114 for Micron.
From defective software, and they just keep selling it to more people and telling people that it is safer than a human driver. It is not. Absolutely not. We have the test to prove it. It should not be on the road at all. Send it back to the engineers and have them teach it what a school bus is and what a fire truck is and dozens of other problems. That's not all there is.
Meantime, this group of Texas lawmakers sent a letter to the company urging them to delay the rollout on Sunday. Is there any sense that's getting any traction within the Texas legal apparatus?
Right. Well, they sent the letter. There are new laws that are coming into effect in September 1st. The letter basically says, please don't launch until you meet the requirements of the September 1st laws. And then then if you do meet all those requirements, and there's a bunch more rules and tests they have to do before they can put it on the road, then we support that. Yes, don't put it on. At least conform to the basic rules they've set.
There's also no shortage of armchair quarterbacks, Dan, who watched the video and argued that no human would have been able to avoid hitting that dummy. Is that a fair retort?
No. Any human, not any human, some break the law, but any human following the law would have stopped. When they saw the school bus stopped with the lights flashing, they would have stopped. We pulled the kid out after they, as they're driving past the school bus. Which is what happened to the kid in North Carolina. He steps off the bus. The self-driving cars stop. It's still moving. You shouldn't be moving. If you follow the law, you will be stationary when that kid comes out. That's what you expect. Kids run behind buses. Buses are very tall. They're much taller than children. So if a kid gets off the bus and he wants to cross the road, he goes in front of the bus. You can't see him. Then he comes out suddenly. That's why you're not allowed to keep driving when you go past the school bus. It's a simple law. It's been around since I was a kid, at least when I learned to drive.
I think
we're
all well aware. Dan, appreciate you sharing some context to the video that made the rounds. We'll see what we get on Sunday. Thank you very much, Dan O'Dowd.
Thank you.
Still to come on the show, Kroger raising sales guidance, posting an earnings beat. Also ahead, CNBC investigates whether big tech should get multi-million-dollar tax breaks for their data centers and how those deals are impacting individual state economies. When Squawk on the Street comes right back.
So yeah, a lot of conversations around Tesla's robotaxi event. A lot of conversations. I think it's going to be a very, very important event. I think there's going to be a lot of discussions and both pros and cons, and a lot of people, both bull and bear, are going to both appreciate and criticize the robotaxi day that's coming up for Tesla. It's been, the last 5 years, Tesla's been the most debated, most hated, most shorted stock in the market. And despite so much drama, it's sustained its value. Despite a lot of this, it's still sitting strong at over $1 trillion in market cap. So we'll see what happens. We'll see what happens on Sunday. I mean, it's just going to be, I feel, one of the most important day in Tesla's 3 to 5 year history that we've seen over the last 3 to 5 years. I mean, it's going to be a very big day because it's either going to unlock a big revenue stream or it's really going to put the company in some big issues, some big problems. Anthony says, I became a bull of Tesla. I wasn't before. So that's good. But the valuation is still high. I mean, it's trading at a crazy valuation. I would agree with anybody who makes up that argument that, okay, that's all well and good, but the valuation that it trades at is still ridiculous. And I would agree. I think. So Suresh, I already shared my thoughts on Apple. So if you want to go back on the live stream, come back to watch it and then come back, that would be fine. But I did share my thoughts on Apple earlier, going over that stock in more detail. Okay, Oscar Health. Let's. So this is TradingView, Koreax. I'm using TradingView right now here. I'm using Webull over here. So multiple different platforms. So Webull, TradingView, and then I've got our own website, moneyvest.com, for the Moneyvest Index, the snapshot calendar, a lot of different features and functionality. And we're adding more. We're doing a complete redesign of the UI, and then we'll be launching that as well. So, Oscar Health, I know there's been some discussions on that stock in our Discord as well. And it's up another 16%, $21, $22. Absolutely insane, and it's coming up to that resistance now. So I would put down a target of $23. I think it can get up to that level, and then we'll see what happens there. But very strong momentum coming in. Last couple days, it's gone from like $14-15 to now $22. So incredible momentum. 35-36% already. Rax, can you bring your platform to mobile too? Yes, so we're working on that. There's a lot of regulations with iOS and Android that we have to comply with. So that's something that we are working on. And eventually, yes, it will be available on mobile apps as well. And not only that, there's going to be educational tutorials, all the courses, everything on a mobile app. Everything's going to be integrated in one place. And there's been a lot of impersonators and scammers on Discord as well. So the long-term plan would be to move everything out of Discord into our own application so that we avoid any scams and impersonators on our own MoneyVest app. So educational tutorials, market analysis, live streams, community, everything's going to be in one single app. But it is a long-term plan, so we're working on it. Okay, let's see. Lululemon for Ken. Let's take a quick look. This is also a stock that's been absolutely destroyed over the last couple months here, coming back down to that area of support of 227. So puts are going to look pretty attractive for Lululemon. I'm sure they already are. So if you come over to Lululemon here, let's take a look at the put prices and where they're trading. I don't know if they're going to show up because we got about 3 minutes until market opens. So this will update as soon as the market opens. So I will be able to take a look at that once the market opens. But yes, they've been selling off like crazy, and they're coming down to that very important area of demand right now, around 225, 226 for Lululemon. Valuations also come down like insane. 16 times earnings, 14 times cash, and just under 3 times sales for this stock. So here we go. A couple more minutes until market opens. We'll keep you guys updated on my positions. Like I said, I'm looking at either selling Palantir calls, selling BITX calls, also looking at selling HIMS puts, but it is going to potentially have a very strong green day as it starts to break out. So put premiums are actually going to be not that attractive, so may not be worthwhile locking up capital on HIMS puts. Shorting NVIDIA is a good idea, given how much overbought it is for 5 to 10% downside. So it is overbought, right? But the question is if that's going to result in a correction or a pullback. So, instead of shorting and sort of buying puts, what I like to focus on is selling calls, because with selling calls, I'm a little bit more net neutral. If NVIDIA rallies, that's fine. If NVIDIA drops, that's also fine. But if you are straight up shorting it by buying puts, you are constrained with both time and direction and also price. So you need NVIDIA at a certain price by a certain date in certain direction. And it's very difficult to be right on all three. So the way we look at it is, yes, something can be overbought, but is it going to result in a correction? That's unknown. It is going to eventually, right? So it's not a question of if, it's a question of when, but we don't know when. So that's why I kind of refrain from buying options, mostly selling options, because this gives me a higher probability of success. And I don't need to predict. I just need to be okay with my decisions and just comfortably write options to generate more premiums while also capitalizing on the upside momentum. So that's the whole idea. All right, everyone. So market's going to open in about a couple minutes here. Tesla's pushing up over 2%. NVIDIA's still trading well over 145. QQQ's on the move, 72 basis points higher. We got SPY also on the move here, up over 26 basis points right now. How far out do you typically sell covered calls? It really depends. Sometimes it's a few weeks. Sometimes it could be a few months. Sometimes it could be 6 months. Like, for example, Palantir, I'm looking at 6 months out. BITX, I'm looking at 6 months out as well. So it really depends.
Thousands of items in the last few months. Our brands, which is their generic brands, outpace the national brands, which I think speaks to the overall consumer environment and the value-seeking behavior right now. There's also an update on stores here. They did say that they're going to be closing 60 stores over the next 18 months as part of efficiency moves, but they said that they will find roles for any associates that are impacted, so no mass layoffs there. This is the first store review they've done in 3 years. All those store reviews were on hold because they were trying to get the merger done with Albertsons. The government blocked that, so there's some catch-up to do on that front. As far as leadership, I mean, what I can tell you is the CEO search is still ongoing. Remember, this is that very odd, very abrupt departure by Rodney McMillan, dismissed by in agreement with the board and the general counsel a few months ago. Ron Sargent is the interim CEO, but he's 69 years old, so they're still looking for a more permanent CEO. He was the former CEO of Staples. But clearly it's not impacting performance, Mike. And in a world of consumer staples being losers this year overall, Kroger has outperformed. It's up 7% for the year, almost double the performance of the group.
Yeah, bouncing here, you see that pullback that started, back in, I guess, early May. Walmart peaked in January. Costco peaked a couple months later. Obviously, they're not perfect comps, but they're the biggest grocery sellers out there. So it feels as if market's in search of something, that has come in a little bit. That's a play on, decent top line looking ahead in this category.
Yeah, we mentioned Walmart down 10 straight days a few days ago. And we saw the weakness in restaurants and bars and retail sales might imply some consumers are sticking to more groceries.
Yeah, I mean, market's definitely uneasy about it. Just not really willing to bet that it's going to be steady as she goes on that front. Walmart really big in the momentum factor trade, too. That's been part of that decline.
Let's get the opening bell here in the CNBC Real-Time Exchange with a big board. It's nonprofit Zero Prostate Cancer and pharma company Novartis at the NASDAQ. It's Carver Bancorp, a community development financial institution. As we get a sense of the open here, hovering just above S&P 6K. Oil was above 76 to start the morning, now below 75.
Yeah, WTI had a bounce. There was an inventory draw, and I think that maybe got a lot of people excited for another reason for a bid here. Although 2-week window here before the possibility of any U.S. involvement in Iran. It seems as if there's going to be a little bit of a moment of truth for oil because the trend is still lower. A lot of folks are basically saying this looks like a little bit of just a powerful oversold bounce, obviously in the absence of genuine supply disruptions. And so we'll see. It'll be a bit of a challenge. We've been here before. Mid-70s has been a routine price the last couple of years.
Yeah, watching some call options in oil, about a 30% probability you hit $100 in the next 3 months. As for gasoline, 10-month high on gasoline futures, which implies retail prices, I think, around $3.30. We're already up a dime off the lows. And then that gas, highest since April 4th.
Yeah, and, the commodity story is definitely, it stopped helping on the inflation side, to say the least. And it acts as a little bit of a restraint, I think you would argue. Not major. I think it's just a matter of around the edges. And, the drop in oil prices was part of the story for, why the economy could you better absorb the uncertainty window that we're in right now when it comes to tariffs and the budget. We'll see. I mean, 6,000, it seems like the market's like, on a lead right around that level. It's been plus or minus, 0.5% from there for a while. Big picture, you look at the S&P 500, a month ago, the market at this, the peak of this huge rally off the low was looking extremely overbought, and it's basically gone sideways for a month. It hasn't had a major pullback. It's basically chopped around these levels and cooled off in the process. It's become less overbought. So just in a purely, let's read the chart and try to figure out the message sense of it, it's basically acting almost as if you'd want it to if you were bullish here and you feel like it's reloading for another move higher. Obviously, I've still been saying it's pricing in some good stuff. You obviously have this downturn in the economic surprise factor that's not really registering that much in the market. And, things have to break the correct way for you to get paid by buying it at 6,000. But so far, it's hanging in there.
I mean, the resilience is what's really notable.
Right.
Even as you say, if it takes a step back, we're 2.3% away from a record high on the S&P 500. We're up for the now third positive week in the last 4. And if you're wondering what's really fueling it, it is tech and it is AI.
Yeah,
I mean, that continues to be the dominant outperformer again today. It's Tesla, Apple, Amazon, Broadcom, Netflix, Nvidia. There you got a recipe for rally. It's broad. You also have the financials doing very well lately, and they're up again today. Healthcare has actually started to reassert itself a little bit as a group. So is energy, as oil prices have risen. But again, the AI trade is back on. When you have SoFi talking about $1 trillion, AI projects and no let up in CapEx spending, that just continues to fuel this. Netflix also, part of the story today.
Sure.
I don't know, some analysts love today from Netflix, a few calls worth highlighting. So Wells Fargo, for one, on Netflix says they're looking at this idea that short-form content could be the next catalyst for Netflix. They're talking about YouTube stars essentially signing deals with Netflix. I'm not sure that that's necessarily happened, or this is one of those notes that's like, we think this is a good idea and therefore it could really help Netflix. But they see it as a third pillar of growth after sports and ads. They increased the price target to $1,500. Pivotal Research, by the way, also with some action on Netflix today, raising its price target to a street high of $1,600. Saying a $1 trillion valuation by 2030 is reasonable. Whether it's getting into YouTube stars or not, that has just been...
All right, everyone. So markets open. We got NASDAQ here over 65 basis points. S&P's back over 6,000. It is now slightly positive on the week. And year to date, it is up over 1.77%. So we're kind of flat so far year to date. On the S&P 500, Tesla here back over 330 right now. It's up over 2.5%. And Nvidia also really closing in at 146, kind of got rejected at 146 earlier in the day. But we'll see if it actually breaks above 146 here on the day. 150 are my calls for, let me just check, September, I think. That's the expiration. December. December is what I'm looking at for those 150 calls. So they're 6 months out. If it does get closer to that level, then of course I'll be looking at rolling those out. I've got the BITX puts that are essentially flat right now, so not much of a move, and we got the SoFi shares, and of course the calls that are down about $127 because it's actually pulling back a little bit intraday. And Tesla, of course, is also higher on the day right now. So that's all I've got for you today. Thank you so much for joining, everyone. Again, if you want to get access to all the trade alerts, again, members-only videos, join our Discord and everything else. Link's going to be down below if you're interested in joining us. I'm going to paste the link over here as well. You can pretty much join us, and we can help you in your journey, whether it's trading options, long-term investing, swing trading, fundamental analysis, technical analysis, everything included. So thank you so much for joining, everyone. Have a great weekend. We'll see you all in the next